Turkey Finance has positioned itself as a global investment leader. Derya Gürek, CEO of the bank, joins me to explain how it has transcended economic instability both globally and nationally. Now, Derya, when we spoke last year, you told us how Turkey Finance was exceeding industry expectations in terms of talent management, network distribution and customer footing. How have the last 12 months treated you?
We replicated our previous year's performance. Again, we are growing in excess of the sector's growth rate in terms of branch network expansion, human resources, balance sheet growth, as well as profit growth. To put them in numbers, profits grew over 16% last year, and asset size grew 43%. Loan portfolio size grew 40%. Also on the deposit side, we grew 32%. And through the first quarter of 2014, our profit grew 15% versus the Turkish banking sector's profit reduction by 14%. So totally opposite direction we're heading. So far everything is very good for us.
So you grew 15% compared with the banking sector in Turkey overall decreasing by 14%. That's an incredible result. Can you tell me a bit more about that?
It is coming from the business model, mostly. We are a true SME bank, as we call ourselves. In Turkish banking sector, our loan portfolio market share is about 1.7%. Our market share in SME business is over 3%. It is our core business. It is where we have the muscles, and it's where we punch over our weight. SME business is a long-term relationship-driven business. It is a long-term financing, installment-based repayment. So our long-term investments on SME business basically paying off these days. So this is how we differentiated ourselves from the market. But all the Turkish banks are now inventing SME business, so it will be fun.
Let's talk in more detail about the regulations that are impacting you then. What changes have been made, and are they negatively impacting on banking in Turkey, on customers' experience?
The reason why the banking sector lost momentum in terms of the profit is because the over-regulation or the heavy regulation on consumer financing recently. That caused the banks lost a lot of momentum, margins and spreads on retail banking. Also, the Turkish banking system lost a lot of momentum because of the declining interest rate first, and then the suddenly increasing interest rates in the beginning of the year on the securities portfolio. So these are the main issues. So we haven't been active on those fields. For that reason, we haven't been impacted as the others. The only glitch is the pricing. When you have the volatility, the negative volatility, then you pay extra price. This is what we're going through at the moment.
What can be done to ease out that volatility, if anything?
The government has been trying to motivate savings on one hand, and also trying to curb the spendings of the individuals so that they are guided to savings rather than spending. We have been coming from a very high inflation environment. I remember the inflation, per annum inflation was about 90%. The average was over 60%. From that extreme, in less than 10 years' time, we went to the other extreme of low interest rate environment. And two extremes are giving this one same result, which is spend. Okay, so this is our dilemma.
Would you like to see any changes in the government's plans?
No. The recent rate cut of central bank, of course, suddenly and immediately gave a good and positive boost to Turkish banking bottom line. Also, towards the year end, Turkish banking sector will be able to recover some of the lost momentum on that profit generation. And for that reason, we saw around over 20–30% rally on the stocks.
I want to touch on quite a milestone for Turkey Finance earlier this year, a $500 million Sukuk issuance in May. Tell me about that.
We received incredible amount of interest, attention. The demand was over 3 times demand on our issues. And for the first time, there was tangible interest from Asia. 15% has been allocated to Asian investors. And we are in the process of issuing a Malaysian ringgit sukuk. And it will be the first in Turkey tapping this source in Malaysia.
Do you think that the growing international acceptance of Islamic finance is really helping Turkey finance and Turkey's economy?
That's true. Islamic banking in Turkey has been growing steadily. We stand for 5.5% of the banking sector. And when you consider it was only less than 2% 10 years ago, we have been growing with the speed of twice as much the banking sector's growth. And of course, unfortunately, Turkey is capital short and saving short. For that reason, to fuel this growth, we are depending on foreigners' savings. So your saving with your bank is basically coming and fueling our growth. So thank you very much, because 15% of our sukuk has been financed by investors in London.
Daria, thank you very much.
Thank you.